Right. Good afternoon, everyone. Thank you so much for joining us for today's webinar. We're very excited to share some of the lessons that we've learned so far, but also hopefully this is opening up a discussion that will be ongoing over, I think, probably quite a number of years. So today we're going to be talking through some of the emerging evidence for open finance in Africa. I think as many of you will be familiar, open finance is a really strong emerging topic across the world, which a number of countries and decision makers and regulators in different countries are giving quite a bit of thought to. In Africa, we do see a number of countries giving similar consideration to the applicability and appropriateness of open finance in their local markets. But we have yet to see any fully operational models on the continent. And so through the project that we're currently engaging in with our partners, Smart Africa and the Hewlett Foundation, we've had the privilege of working with the National Bank of Rwanda and the Bank of Zambia to assess what open finance might look like, whether it would be feasible in African markets and what it might look like to design tailored implementation appropriate for African markets. Clearly, every market is distinct, and that's why we focused on two. But we hope that some of the lessons emerging from this will also be useful in informing other countries as they begin to embark on this journey, as well as other, there's many actors who are involved in bringing something like open finance to full implementation. So thank you for joining us. We already have made the deck available on our website for anyone that wants to find it there. And the recording will be made available sometime after this webinar. So also for people who didn't attend, we'll be able to find it. And then as we go, please post any questions that you may have in the chat, and we'll do our best to respond via the chat. And in the second half of today, we'll also be having a panel discussion in which any questions that you post in the chat can be posed to the panelists as well to get their perspectives. We have quite a lot to cover today, so I may not cover everything that's mentioned on all these slides, but that's why we're making the slide deck available already as well, so that you can delve into more information. So today we'll go through the presentation first, like I mentioned, and then my colleague Amina will lead us through a facilitated panel discussion with three great panelists that we have from Rwanda and Zambia to discuss their experiences and their perspectives of open finance in their respective countries. But let's start at the beginning and start with what is it that we're actually talking about when we talk about open finance. There are a number of emerging definitions for open finance and open banking globally. And we're not trying to propose a new definition here. Rather, we're just trying to set the tone or the parameters of what we're really talking about, which is, so we've used the definition that I think was initially developed by CGAP, which is to define it as the exchange of consumer data between financial service providers and other FSPs or regulated third-party service providers on the basis of consumer consent. And as we know, it's that last clause that is really critical to the facilitation of, to what we mean by open finance. I'm sure that there will, over the next couple of years, be some more formalized definitions as it gains traction globally. But this, I think, sets the scene in terms of at least what we're talking about today. We also think about open finance in the context of where it fits in the relative to open banking and to the sharing of data in other sectors. So we see open finance as being the extrapolation or the expansion of open banking, where open banking really focuses on banking and payments providers as the primary entities that typically are mandated to share their data with third-party providers. Open finance is the broader concept where we incorporate all players in the financial sector. And in time, I think, although possibly in some cases a long time, we're almost certainly going to look at additional types of data being made shareable within the same ecosystem. And certainly there are some countries in the developed world that are already beginning to explore these opportunities. So in Africa, we already see quite a number of countries beginning to think about and to explore the potential and the applicability of open finance in their markets. On the whole, this has been driven by national central banks as being the leaders in driving forward with this policy. But in certain cases, ministries of finance or national treasuries are also taking a lead role. The primary policy objectives and the reasons for pursuing it do range across the spectrum, as we see across the world. But prominently in Africa is financial inclusion as a primary objective for many countries when thinking about why to implement open finance. Enabled through increased competition and opening up the opportunity for innovation that can better design products and solutions for consumers, with financial inclusion being quite important. Creating an enabling environment for fintechs is probably the other large or other major policy driver that we see. These, as I say, are maybe facilitated by aspects like increased competition and access to credit data. But those are probably the two most prominent policy objectives that we've seen across countries on the continent to date. On the whole, data protection regulation, which is often a key prerequisite, or at least a strong enabler of open finance regimes, has begun to emerge across, or has been established over the last 5 to 10 years across the continent. 61% of countries now have data protection regulations in place. I'll come back to this point a little bit later. But we do know that there are a number of benefits and risks related to the implementation of open finance. It can enable us to better understand customers and design products more effectively, and therefore contribute to government's policy objectives. But it clearly does come with risks. And that is really the objective of what we have started to look at, which is really to try and conduct an assessment, an evidence-based assessment, to determine whether open finance is appropriate and feasible within a given market. And based on that assessment, to then design an implementation plan that takes into account the unique context of each individual country and tailors an approach that is designed to ensure inclusion and positive outcomes rather than exclusion and net negative outcomes. And we think that this is really important for all countries to consider. Based on what we've seen so far, each country context really does have unique, as I think everyone on this call will know, has really unique dynamics that requires us to think quite carefully about what the specifics within a country context are, and to design implementation according to that. There is a lot that can be learned from global best practice, and a lot that can be adapted from existing global standards and global norms, but it does need to be tailored and targeted to the local context, and that can only be done if there's an effective understanding of what the local context is. It's also really important, I think, that there's an ongoing element of monitoring and evaluation. We're still early in the process of open finance implementation globally, and there's a lot of learning to be done. So a very deliberate emphasis on monitoring and evaluation and refining the approach throughout any form of implementation, I think, is really important. So how we've gone about this, and we've had, as I mentioned, the privilege to work with Rwanda and Zambia through this project so far, is really break it down in a diagnostic style to look at the different components that make up the market. So we've looked at the regulatory environment, the infrastructure, we've looked at consumers and the demand side, and then we've looked at the supply side, so FSPs and fintechs and third-party providers, to determine whether they'd both be able and willing to share their data, as well as whether they'd be able to make use of that data if it was made shareable. So starting with some of the insights that we've seen from the regulatory and policy space, in the assessment that we recommend, we start with looking at right from the base of the Constitution. Many of the aspects of who owns data really comes right down to the principles of privacy within the Constitution, through to what does the current regulatory landscape look like. And some of the key supportive regulations that we've seen be quite important in countries is data protection regulation, cybersecurity, and consumer protection. But also the enabling mandate and powers of regulators is very important. So do regulators in those countries have a mandate that would enable them to mandate the sharing of data? We know that globally, there is a spectrum of approaches that can be taken to the provision of, or the facilitation of, open finance. And some countries have taken a much more voluntary approach. But I think increasingly there's evidence that the more successful regimes do have a regulated and mandated element to those models. And certainly, I think in less developed countries, or certainly in the African countries that we've looked at to date, that does seem to be important in terms of providing the right incentives for actors in the market to participate. And I think many of you will be familiar with Rafe Mazur's work, where he looked at this globally as well and found this from a much more comprehensive analysis of trying to assess this specific question. Some of the interesting things we've seen from looking across the two countries, and I'm just going to pull out a couple of relevant points here, is one is, I think, the operationalization of regulation. So when doing a regulatory analysis, we obviously look at what the regulations say, but that doesn't always tell us what's happening on the ground. So there is a distinct difference sometimes between the de jure and the de facto implementation of regulations. So whilst data protection regulations are in place in 61% of African countries at the moment, it doesn't mean that they're meaningfully enforced. We know that there are challenges with enforcing data protection globally. It's not unique to Africa. But in some cases, for example, in Zambia, whilst the act is fully in place and has been enforced since, or has been active since the end of last year, there's still no real regulator in place. There is a data protection commissioner, but no supporting infrastructure to enforce that. And the result is that broadly across actors within the market, there isn't meaningful implementation of the principles within that act. The other key point I just want to pick out of this is the inclusion of mobile money operators. So unlike, I think, many other regions of the world, mobile money, well, in many other regions of the world, the open banking has been where we've started this journey towards open finance, because banks account for or constitute the primary actors within the market. In Africa, it's the mobile money operators that are really the most important actors in the market, particularly if you by most important, we mean largest in terms of customer base. In both Rwanda and Zambia, the mobile money operators have significantly more customers than the banks do. So in order to think about the initial approach to open banking or open finance, it is really important that mobile money operators are included right from the beginning, because if they're excluded, then we're missing out on a huge number of customer data. And so what's important is to be clear on whether the central bank, or who has the mandate and the regulatory oversight over those mobile money operators. Increasingly, they are being set up as independent institutions. In many countries are being required to be set up as independent institutions, independent from the mobile network operators from which most of them were spawned. But that is not the case in every single country. Safaricom, for instance, still remains a single entity in Kenya. Moving on to infrastructure, there's a number of key elements that constitute important infrastructure. And this is not intended to be comprehensive, but some of the key enabling infrastructure is a national ID, and particularly having, if not digital ID, at least a digitalized identity database in which identity can be verified against. And that's particularly helps to enable customer consent. Open banking has been successfully implemented in a country like the UK, where there is no national ID, but it really does improve the ability and efficiency and ease, I think, with which ID can be verified to facilitate consent for the sharing of data. Obviously, that can also be a use case if national ID doesn't exist. But yeah, we've certainly seen, I think it seems a lot easier to implement open finance if there is a digitalized ID. And then robust payment systems are certainly an important enabler. I think what's also relevant on the right there, that comment about Brazil, CGAP, I'm sure many of you attended the webinar and have seen the great work that CGAP have done in Brazil. And they really articulated quite well how Brazil went through a whole series of digitalization interventions across the payment system and the financial sector, And open finance is one component of that overall approach. And I think that is the important insight here, is that when thinking about implementation of open finance in Africa, it shouldn't be seen as an end in itself, but rather as part of a comprehensive approach to developing the financial sector overall, which requires putting in place all these different parameters and pieces of infrastructure. But speaking of payment systems, I think that is certainly one of the things that we do see is being increasingly enabling across the continent. So not just looking at Rwanda and Zambia, but really across the continent. Based on some research that some of our colleagues have done with African Ender, we see this strong emergence of instant and inclusive payment systems across the continent, which are really facilitating efficient payments that help to provide that basis for increased engagement and through open finance, particularly when thinking about things like payments initiation. The other point to pick out here, I think, relates to that first bullet, which relates again to the national identity databases, which is that there is really quite a stark difference between different countries on the continent in terms of where they are with their ID databases. In Rwanda, we see a really well-established approach to the digitalization of national identity, where all financial service providers are able to directly integrate via API to verify identity for any customers. That has spawned the development and growth and deep understanding of how APIs work in that market, but also increased comfort by consumers to facilitate and to give consent for verification of their personal information, as well as obviously improving significant efficiencies with eKYC. On the other hand, we see other countries that are still purely paper-based in terms of their national ID and have quite a long way to go by contrast. So then moving on, I think, to probably the most interesting part of this, which is looking at the market players. So looking at consumers as the data owners, the financial service providers as the data holders, and then the fintechs and third-party providers as data users. And we know that FSPs can obviously also be data users as well as the data holders. So looking at the data owners, we wanted to engage directly with customers to understand how they would think about open finance and how they would think about consenting to the sharing of their personal data. And I think the overarching takeaway from this was that customers are really were quite clear to us that they see significant benefit in the sharing of their data. We were pleasantly surprised to hear from many of them that they recognize the fact that they should have ownership over their own data, and that they can intuitively understand that if they can receive benefits, then there is value in them making their data shareable through their consent or permission. I would caveat that slightly by saying that the sample that we looked at were a group of customers that we felt would be the most likely early adopters for open finance. So we looked primarily at urban-based individuals and SMEs who already have an account. So if you don't already have an account, you don't really have data in the formal financial system that would be easy to share. So that was the logic of starting there. We do think that as open finance is presumably rolled out more broadly across a country, there would need to be further consumer research conducted to understand how rural and less included consumers would engage with something like open finance. But I think there certainly was, the strong message was that from existing customers, there's a strong mandate that they would very much like their data to provide them with greater value in the form of products that could be designed or available to them through the sharing of it with additional institutions. One of the key challenges is low smartphone penetration, which I think is not a binding constraint, but globally, as far as I'm aware, most, if not all, open banking, open finance approaches have used smartphones as a mechanism to verify consumer consent or other aspects of the verification process. There are ways around it, and we already see alternative approaches like multi-factor authentication or using USSD to verify with consumers on various decisions. So from a risk-based perspective, there should be alternative approaches, but that needs to be designed into the architecture from the beginning for African countries. I think this slide is really interesting in terms of identifying what the key benefits are that customers themselves identified. Top and most commonly was simplicity, efficiency, and convenience. Those were the things they immediately responded to as being of significant benefit from being able to make their data shareable across institutions. But we did also see, and particularly you can see in the Zambian, with the Zambian respondents, that they did also recognize the value and the use case of credit. And I think that second one is really interesting, where they highlighted the fact that they would feel empowered as an owner of their own data if they had more control over it. Some of the top use cases that emerged, account aggregation was really quite popular across both countries and across both segments, which we found really interesting and does highlight that perhaps there is really a need for that across the different providers. I think the other key one I would pick out here is possibly the obvious one, which is credit. And particularly for SMEs, there's a dearth or a real gap in terms of access to finance for MSMEs across the continent. And it's certainly something that was highlighted by both individuals and SMEs, but particularly by SMEs as being of potential value from the sharing of data. And I think certainly a really successful use case in early adopting countries like the UK and Brazil. And then onto the market. So looking at data holders, so the established financial service providers, we spoke to a number of them, and the objective was really twofold. One, to assess what their current perception is, their mindset, and their strategic, where they see open finance strategically, whether they'd be willing to participate in open finance. And then secondly, their ability. So do they have the existing infrastructure and skills in place to build systems and to responsibly make that data available and shareable? And then from a data user's perspective, the key question for us there is, would it enable institutions to design new products using that data? And more than that, so do they have the skills? Do they have the ability to actually make use of that data if it was shareable? And I think whilst there is some opportunities that are emerging on the private sector side, I think, for instance, one of the really interesting ones for us is the inclusion of government data sets. I think for the last few years, there's been a strong emphasis on digitizing government records and government processes, which mean that there are a number of interesting government data sets that could be made available to the private sector. And I think for FSPs, did resonate with them as being quite compelling incentive for them to participate if government data sets were included as part of the shareable data. But I would say that amongst the different components we looked at from this diagnostic approach, this was the sector that probably has the most challenges. And it's probably not really a big surprise. I think the lack of incentive for large market players to participate is something that is, I would imagine, unsurprising to many of you on the call. We see the challenges with driving interoperability and payments over quite a long period of time. This is almost the next iteration of that in terms of interoperability of data. And we would see similar established players being reticent to jump in and be willing to share what they see as a competitive advantage. The other one I think that I want to briefly highlight is the lack of nationally representative databases for fintechs. So as much as open finance would enable fintechs or smaller players to access individual customer data and have a much better understanding of individual customers, what open finance doesn't do is give them a nationally representative database that would enable them to develop a new credit scoring algorithm, for instance, or design new products or identify specific target markets. And so that's probably a piece of infrastructure, something like a digital sandbox in the way that the Financial Conduct Authority in the UK has developed, that would be really valuable for many markets on the continent to think about developing and to use probably as a public asset to really enable and to drive the development of their innovative sectors, or the innovative part of the sector. So from this assessment, there's obviously many factors that contribute to this assessment of whether open finance is feasible, but then more important, or perhaps the next step of that is, how does that then inform the roadmap for implementation in your country? And the way we've thought about this and discussed a lot with our partners in the different countries is that we need to understand the local context and take those dynamics of the local context and combine them with what we've learned globally and emerging global best practices to then tailor recommendations and a roadmap. And I think the other point to really emphasize here is that this roadmap, which we thought about through a comprehensive sort of implementation plan that we structured into two core pillars, which is one, ensuring meaningful participation into open finance, and then two, establishing and maintaining trust. It really thinks about all the components of trust frameworks, and is broken down into 6 key interventions. And there's a lot here that needs to be done. And I think there's a couple of key takeaways that are important. The first is that implementing all of these key interventions, starting from defining what open finance is, including who would participate, how it would operate, and so forth, is really important in shaping and informing the market for any regulators or policymakers that are intending to implement open finance in their country. But there's many of these foundational building blocks that would need to be put in place before this can be responsibly implemented in a given country. And it's not just about ensuring that there's data sharing guidelines in place, not just ensuring you've got data standards and API standards. We also need to think very closely about consumer experience guidelines around liability and recourse with regards to the data sharing. And so this will take some time. But I think what we've seen and what we saw in both Zambia and Rwanda is that the absence of many of these guidelines, standards being in place means that although there is bilateral data sharing already happening between institutions in those markets, it's often done on an ad hoc or on a case-by-case basis rather, which has led to risks and challenges for consumers and for the providers. And so even by putting in place these building blocks, before moving towards something that would be considered truly open finance, certainly a mandated form of open finance, even these building blocks can really provide, we think, a much more robust data ecosystem or data sharing ecosystem and create stronger rules and incentives for data sharing within the financial sector. The second key takeaway from this that I want to emphasize is that whilst we think a lot about the end goal of what is the benefits of open finance or of data sharing, we need to think carefully about the road to get there. And so because this will take some time, what is that implementation pathway and how do we ensure that implementation pathway is implemented in a constantly thoughtful and iterative approach? That means that because that is something that's going to take probably years in many countries to implement. And so we can't just focus on the end goal. We need to focus on also the process to get there and how to ensure that there's inclusion or not exclusion and net benefits throughout that process and not purely, perceived benefits from the end objective. So I think those are some of the key takeaways here. I think like I've said, that's basically the last point I made here. So it will be a multi-year process, even though it could technically be implemented more quickly. Like we can develop APIs more quickly. To be inclusive, I think it does need to be a longer-term approach. But there's a lot of learning that needs to be undertaken here. No country has it all figured out. And it's really critical that African countries develop tailored approaches for the local context, but that they also do take the lessons from globally. But more than that is the next step beyond national data sharing will be cross-border data sharing. And so starting to think about what does regional guidance and regional standards look like, which is aligned to things like the African Free Trade Agreement, I think is the next level of considerations for the continent. So with that, I'm going to hand over to my colleague Amina to introduce her panel and then take us through that discussion.
Cool. Thanks, Jeremy. And good afternoon to everyone joining us today. We're just sorting out our sound. Cool. Thanks, Jeremy. So as Jeremy has outlined, we've looked at some of the key enablers, opportunities, and challenges in implementing open finance over the course of our study. And overall, a really strong enabler on the Rwandan side was the existence of several different government-led initiatives that we felt are quite supportive of open finance. And while we're still in the early stages on the Zambian side of the project, we've seen some interesting bilateral data sharing taking place in the private sector. But of course, it's not without challenges. So I'm really excited to introduce our esteemed panel members that reflect this dynamic. Joining us from Rwanda, Ms. Pamela Umutesi is a senior analyst at the National Bank of Rwanda, and she is within the financial sector development and inclusion department. She's got extensive experience in the insurance industry and has been involved in several different projects aimed at driving financial inclusion. Joining us from Zambia, Mr. Robert Piri is the Chief Executive Officer of the Payments Association in Zambia. With a background in law, he is a thought leader in driving innovation and is an ardent contributor to the Zambian government's digital transformation agenda. And lastly, we have also joining us from Zambia, Ms. Chilekwa Banda, who is the chairperson of the Association for Digital Finance Practitioners in Zambia, and with over 16 years of experience. She's a well-known subject matter expert and has experience in the field of digital financial services and is a very strong advocate for creating an enabling environment for fintech. So welcome, Robert, Pamela, and Chilekwa.
Thank you, Amina.
Right, so I think I'm going to start with Pamela. So as Jeremy has mentioned, Rwanda has made some impressive infrastructure strides, such as, the NIDA National ID Verification API, the Irembo, which is the online sort of one-stop shop for government services. And it really, for us, sort of demonstrated the commitment of Rwanda, to digital transformation. Could you give us a into what your department at the BNR does, what motivated the BNR to pursue open finance and just some of the benefits that the BNR sort of envisions for open finance?
Sure. Thank you very much for this opportunity, and thanks, Amina, for a very kind introduction. Going straight to answer your question, the National Bank of Rwanda is very highly motivated to pursue open finance to enhance efficiency, inclusivity, and innovation in the financial sector, which says a lot in what we do in financial sector development and inclusion. So open finance involving the sharing of consumer data with their consent, this aligns with the BNR vision for a more dynamic and competitive financial landscape. By fostering competition and innovation, improved data utilization creates a vibrant market, enabling tailored financial products that can reach even an underserved audience population, enhancing resilience against economic shocks. And that says mostly on what we do as a department, because we are trying to not leave anyone behind. We want everyone to be served and served appropriately and efficiently. So we recognize that open finance potential for financial inclusion and sustainable development. We as a central bank now, we aim to leverage insight from the targeted data-driven policy making. Thank you.
Amina, you're on mute.
You're
Sorry
muted.
about that. Thanks so much, Chilekwa. Great. I think those reasons and sort of motivations probably resonate well across the continent, Pamela. And I think just to move to my next question, and this is for Robert. So open finance, of course, requires the willingness of financial sector players to collaborate. And we've heard of great bilateral data sharing initiatives in Zambia between some of your members, but there are challenges. And we understand that your organization has been quite involved in driving interoperability amongst your members. Could you briefly tell us about your organization, who are your members and your efforts in driving interoperability, and just what were some of the challenges in that process?
Thank you so much, Amina. Well, I represent the Payments Association of Zambia, and over the years, what we do is provide support to the government as well as regulators in developing policies, regulation, as well as laws that speak to the growth and development of the fintech as well as payment systems in Zambia. Now, we have engaged quite a bit with all our members in terms of just driving the agenda for interoperability, because we believe that it is interoperability that is going to make access to financial services, more easier and more convenient for the customers, particularly those that are in the rural areas who may not be able to afford some of these services. But then I think one thing I need to mention is that there is some willingness in terms of engagement and making all platforms amongst our members shareable and interoperable. But the challenges are quite vast, and some of them include, the differences in regulation. For instance, we have the typical, financial service providers such as the banks, who may have have a conservative approach to, this model and the agenda. And then now we have the MNOs, who are particularly the huge drivers of financial inclusion in Zambia, because mobile money penetration has kept increasing since 2015. So having to reconcile the two regulatory differences becomes a challenge in terms of, implementing interoperability on that end. But then also the other issue is the concept of technology standardization. How banks work is totally different from how, mobile money works as well. That speaks to not only the regulation as well as the law, but also the infrastructure and the technology that, goes with these two different business models. So to speak of interoperability then means that each of these two business sides will have to make a business decision to standardize their infrastructure and technology, and that will come at a cost. Is that, a good business decision to make? Obviously, it is, if you look at it in terms of driving financial inclusion, but also it's something that cannot be done now. So the conversations are still ongoing. But what is good to note is that, there is willingness from within the membership and the other players in the sector to collaborate. I think the other issue, again, which has been very key for us from the point of the association, is really understanding to what point this interoperability is. Because as we speak right now, I'm able to move money from my mobile money wallet to my bank and vice versa, right? But at what level do we want that interoperability to be? We want all the players to be able to be plugged on, so that it becomes easier for me and not just have fewer options where I can send money to certain banks, but I can't send to other banks because they're not, they have not standardized their infrastructure. So essentially, I think in a nutshell, that's where we are. And I think progress is being taken, and we hope that we achieve something by the end of the day. Thank you so much, Amin.
Robert, and I think in terms of our project, we're really looking forward to unpacking that a lot more over the next couple of months. Moving on to Chilekwa. So open finance, of course, as Jeremy has said, does not, involve granting fintechs access to a comprehensive consumer database, that traditional financial service providers or mobile money operators have accumulated over many years, which would allow a fintech to sort of test and develop new products. And in our discussions with fintechs and yourself, there seems to be a need for greater investment in the ideation phase to aid in more sort of data-driven product development. So can you tell us a bit about your organization, the challenges fintechs are experiencing in Zambia in this ideation phase, and sort of why do you think it's so important to address these challenges for something like open finance to be successful?
Hi, Amina. Thank you so much for having me, and good morning, good afternoon to the listeners. With the association, what we do is foster collaboration and private and public sector dialogue. So we do engage with other players within the payments sector, within fintech and digital financial service providers. So most of our membership comes from representation from employees of the Central Bank of Zambia. We have other bank institutions. We have the Zambia Electoral Clearinghouse. And we also have other professionals from different sectors such as insurance, microfinance, etc. So what we do is we look at the challenges that are affecting the professionals within the ecosystem. And then we look at how those products and services can actually support the digital financial inclusion strategy at a global level. And by ensuring that we have a platform to engage with our marginalized communities, so the rural areas that do not have access to digital financial services. And we do this by engaging with them and bringing up capacity building initiatives and being a digital financial services educator. So for us, we thrive on training. And how we do this is working closely with other partners, the Payments Association of Zambia being one of our partners, and financial sector deepening Zambia, etc. When you look at the challenges that are being faced by the fintechs, not only in Zambia, but on a global scale, I didn't mention that the Association for Digital Finance Practitioners is also part of a member of the Alliance of Digital Finance Practitioners, which is we're now currently at 24 African countries. And we are also part of the Africa FinTech Network, which has a membership of 45 African countries. What this means is we also get to understand the challenges on a global scale and see how these are also affecting us at a national level. So when you look at data accessibility, which is something that Jeremy spoke into, this is a common factor in every African country, right? But we speak more on the availability of data and not so much on the centralization of that data. The data is there, but it's scattered everywhere. And then we also look at clarity in regulation. So most fintechs will complain that, let's say, they don't get support from the regulators, etc. But for us in Zambia, it's not the case. We do get support from our regulators. We actually have a public-private dialogue forum that has been created to support that engagement, right? But what we've realized is that the clarity isn't really there to support startups, especially those in the early stage, so your ideation phase. You find that even the investments that are coming into the country are looking mainly at the startups that are in growth stage. So how are we going to help our economy if we're really sidelining the ones that don't really have funding? Funding now is also a challenge, right? We hear about funding across the globe, but for Zambia specifically, I think it's more to do with access to investors. So most people may have the funds, they have a little bit of their startup capital, but they don't really know who to speak to. And also our currency right now is not doing very well, right? So it's not so much that people cannot find money, they can't afford to spend on advanced technology. They can't afford to pay for the right organizations to partner with, you know. We also look at technical expertise. We have local tech developers, we have brilliant minds in Zambia, but they don't have visibility. No one knows about them. So this is why an association like ours exists, to really showcase our people, because we do have smart people. But you find that because there's not really a platform that will showcase these talents, now we have the Women in Technology Network coming up, you know, to showcase the women that are doing amazing things in technology. I'm also part of that network as a woman in tech. We have the Payments Association that is speaking into the mobile network operators. We have the ICT Association that is speaking into the ICT sector, right? But all that coupled with the fintechs, you find that infrastructure is also another problem. We have access to the networks, but we're looking at having proper connectivity. So those are some of the challenges that I think we really need to look into as an association, to work closely with the public sector, this is government, the ministries, that will give a chance to the fintechs to thrive.
Thanks so much, Shelekwa. And I definitely agree with you that those are not challenges unique to just Zambia. But we, again, are looking forward to exploring them a bit more over the next couple of months. I think I'm going to move over now back to Pamela. So Pamela, the BNR has of course walked this journey with us over the last couple of months. Could you tell us, what is the biggest takeaway from the feasibility study for the BNR?
Yes. Before I delve into the biggest takeaways, let me come back to the benefits, because I feel like I didn't
Sure, go for it.
reiterate well. So one of the potential benefits that we envision from the open finance is, first of all, so we have three categories: the consumers or the data owner, FSPs, or as Jeremy say, data holders, and the regulator. So for the client, it's very evident that they are going to benefit from a tailored product, particularly for individuals and MSMEs, fostering convenience and cost saving for traditional banking users or other financial service products, while empowering those who are underserved with very personalized financial offerings. For FSPs or financial service providers, now they can capitalize on that data insight to enhance customer centricity, increasing their customer acquisition and retention, and expand mostly on their customer base by streamlining their operations. For regulators, also, we are going to benefit a lot because this aligns with government development goals, promoting competition, innovation, and inclusion. But everything, we have to make sure that we minimize the risk through secure data sharing practices. Now, getting into details on what is our biggest takeaway. So it's not what we discovered, but we retain that there is no one size fits all solution for open finance. Everything is going to depend on the circumstance of the country and the specific need we have. So this stresses the need to talk to everyone, involving all the institutions, whether in public or private sector, either they be in finance, financial or non-financial sector. So which means we are going to consider everyone based on their different needs and of the situation they are in this financial system, even beyond that. So the study also shows that to make open finance work well in Rwanda, it is very crucial to work with everyone and work together, everyone who's involved, and create a plan that fits the specific circumstance in the country. Thank you.
Well, thanks so much, Pamela. I think we, during the course of the project, we obviously set up a consultative working group with many of the stakeholders from, the public and private sector. And I think that worked really well throughout to kind of get comments and input and feedback. So thanks for that. I'm going to move back to Robert now. So in our discussions, thus far with the several different stakeholders in Zambia, there seems to still be a perception that these large providers own consumer data. And this perception often means that while bilateral partnerships are taking place, they're very one-sided in that, the large provider gets to decide who they partner with, who they share data with, etc. And, even during the course of the study so far, we've kind of struggled to get engagement from some of those larger players. So for us, this brings into question, whether a mandatory element is necessary to ensure participation. So what are your thoughts on this, in the mandatory data sharing approach?
Well, thank you so much. And I do agree with you, even for us from the point of an association, what we observe is that there's this belief amongst the key players to think that, the data that they obtain from their customers or consumers belongs to them. No, that data belongs to the customer. You are only holding it on behalf of the customer, right? And it is only right that you are able to share that information and that data based on the customer's consent for the benefit of the customer, right? And this is what I think open finance is all about. It's about being able to share that information so that the customer has better options to choose from in terms of what products and services that they can access on the platforms, right? So that has been the approach. And for us to be able to, I think, to move forward, I think a component of having the key players to voluntarily, come on board and provide support will be very good. I think that's an ideal situation, because then it allows for the key players to feel part of the process and they own the process, and so they don't feel like people are dragging them to do something that they're not willing to do. But I also think that for purposes of ensuring success and ensuring that we reach the last mile, we have to come to a point where we can make it mandatory for the key players to participate in this process. Because if they are the key, I'll give an example of something that I think Ken alluded to. For Zambia in particular, mobile money is a huge driver for financial inclusion. Now, imagine if all the MNOs said they are not going to participate. It means you are leaving close to about 11 million people excluded from having access to, credit, having access to financial services. So we need to be able to come to a point where we engage. Yes, we must engage with the players, and we must do it quickly as soon as possible. And I love the approach that you took in ensuring, as you were conducting the survey here in Zambia, that you engaged everyone across the board, both the big and the small entities, right? But from a point of implementing open finance for us, we have to come to a point where mandating, participation becomes key, because then we cannot afford to leave people behind. And that's the whole purpose of financial inclusion. And I'm glad that the Bank of Zambia now has launched the financial inclusion strategy, vision and strategy for 2024 going forward, I think up to 2027. And this is why there are even, there are now these discussions about, introducing open finance to Zambia, in Zambia. Why? Because we know that it's going to make, access to financial services more convenient for the customers, and people will have more options. And that's what we want. We want the customers to be able to have options and choose what products and services best suit their needs. So thank you so much.
Thanks, Robert. Yes, I think we're definitely tried during the project duration to sort of include as many stakeholders as possible, and we hope to do that, continue to do that over the next couple of months. I'll come back to the point on mandatory data sharing, but I want to quickly move to Chilekwa again and talk about fintech associations. So fintech associations are relatively new in many African countries. Zambia is a good example in that there isn't an official fintech association at the moment. Even in countries where such an association already exists, they often lack a strong voice in discussions that are impacting the sector. So we, of course, are sort of advocating for an evidence-based policy making approach to open finance, and that means taking into account fintech voices. So can you sort of discuss the importance of including fintech voices in these dialogues, and in including them in, in building evidence for policies?
Thanks, Amina. To answer that question, I think I'll circle back to the government of Estonia. I've been following that very closely. Estonia is a small country with a population of about 1.4 million, right? But if you see how the government has been involved, from the policymakers to supporting the startup ecosystem, they're literally, I think their growth was about 7.5% GDP compared between 2019 to 2022, right? This honestly shows you the importance of the government's involvement in a country's development, not just with its resources, but its people. And when you look at people, we're talking about the people that are thriving to try and start the business, entrepreneurs. And so when you think of the fintech associations, you find that in every country, we have so many associations working in silos, but they're not really coming together to build that association that is driving one focus. Robert has mentioned something that is very critical here. Every institution, organization, every sector is targeting the same customer. Right now, I can tell you that the customer is probably confused with how many banking apps. I'm sure even for yourself, Amina, you've probably got so many mobile money apps, financial service providers on your phone. Now imagine a situation where we really did look at interoperability as an easier way to help the consumer. I'm also somebody's customer. I may be in the tech space, I'm also somebody's customer. But the confusion lies in the way we communicate our products and services. If we centralized communication to suit the markets, for instance, I think something that the South African government does very well is they localize most of their products to suit the languages across the country, right? This is something that we should be doing as an association. For Zambia, we don't have a fintech association, but we're hoping that we'll get into that space because fintech is broad. Fintech just doesn't look at payments or technology. Fintech cuts across every sector. So you have mining. At some point, a miner will require a drone technology to be able to understand the minerals that are in the ground. You have the agriculture sector that is looking at the farming season. You need technology to understand the patterns, climate change, et cetera, et cetera. So we need to look at fintech as a solution that will actually drive economic growth, and we need support from the government. And so it's very essential for the policymakers, the regulators, the authorities to come together and drive that agenda forward. That's the only time we can win. Thank you.
Yeah, thanks so much for that, Chilekwa. I'm going to move back to you, Pamela. Could you maybe take us through what are the next steps for the BNR with regards to open finance? And is there any advice that you could offer to other African countries considering open finance?
Two questions in a row. Very happy to answer that. So what is the next steps or the next steps? So the next step for open finance now involves a proposed implementation plan structured into 4 distinct phases over the next 5 years period. So the initial phase span between 18 to 24 months, and it concentrates on laying the foundation building blocks for open finance. So this will include proactively communicating and discussing open finance objectives, establishing governance structures, and developing comprehensive national standard for data sharing. The phase also will involve creating a national data sandbox that this is going to facilitate enhanced data use. It will also be very crucial to effectively complete these activities as this is going to improve the data sharing ecosystem in Rwanda financial sector. And evaluation assessment is also recommended before progressing to the next phase. This is to determine if voluntary data sharing is already well supported by the foundation blocks. Now, the advice that I will give to our peers is that before considering adopting the open finance is very key and crucial to prioritize certain factors. So first, they need to make sure that the market is ready. That's very essential because it's going to emphasize the importance of assessing the demand, the readiness of demand, and the financial ecosystem for open finance initiatives. Second, they have to have robust regulatory framework in place, particularly in areas of data protection and EPI standards, because this is very, very crucial to secure and to implement the compliance aspect of it. There is no reason to enhance and emphasize how this step is very crucial because it's going to enable even the next steps. If the trust is broken, other initiatives is not going to be possible. Additionally, I would advise other peer countries also to focus on ensuring their infrastructure is well prepared to support the technical requirement for open finance and include necessary technology and connectivity. Last but not least, I think a successful start-off is contingent or thorough preparation and coordination among stakeholders, both public and private, to foster a collaborative and inclusive approach in implementing open finance. So in a nutshell, those are the 3, if it's not 4, advice I would give to my countries, particularly in these emerging markets. Thank you very much.
Thanks so much, Pamela. And totally agree with you on those points as well. I'm going to move over back to you, Robert, and just pick up the conversation around the mandatory approach. So I think in terms of our thinking around it, we definitely think that a mandatory approach, is necessary for any kind of meaningful participation. But we also strongly believe that for open finance to be sustainable in the long run, there really needs to be sufficient incentives in place. So could you maybe tell us, what are some of the major benefits of open finance and data sharing that you envision for your members?
Well, thank you so much, Amina. But maybe before I can delve into discussing that point, I wanted to just mention in terms of creating a fintech association, there has been an effort from ourselves to try and change the name from Payments Association to Payments and Fintech Association. And we did engage the Ministry of Technology and Science, and the process had been started, but then I think we reached a dead end when we were told that actually the ministry responsible for that would be Ministry of Finance. So we are now in the process of having those discussions. And the purpose for this was, we do not want to register another association that does almost the same thing that we are already doing. We are already established. I think we have created, for lack of better terms, a name for ourselves. There's a voice that we are, there's a voice that has been created to represent members in the payment system as well as fintechs. And if you look at the composition of the Payments Association of Zambia membership, it's purely fintechs. So that is in the process, and we'll report to the general public once we reach a milestone with the Ministry of Finance. But in terms of the benefits, for me, number one, before we can even talk about the players themselves, I like to focus on the customer, because without the customer, our players are nothing. We can't be developing platforms and innovations if there's nobody to use those innovations and platforms. So the benefits are enormous for the customers, because what we have seen so far is the traditional brick and mortar type of banking it's been declining in Zambia. A lot of people are leaving, and I'm sure you are aware of that through the reports that the Bank of Zambia produces. So what do we need now to sort of stimulate interest in the people for them to get back to formal banking services? Because as long as we're not able to capture people that are in the informal banking sector, we will not be able to know what is happening in our economy, and championing development then becomes difficult as a country. So we want to focus on the customer first of all. And what open finance does for the customer is that it gives the customer more options. And I think I've mentioned this, and I'll keep mentioning it. It gives the customer more options. It allows for the customer now to be able to choose what products and services that they want that best suit their needs. But beyond that, they are also able to choose the pricing that they want to be charged for the products and services that they're obtaining. Because right now it's very difficult for a customer to know. For instance, if I'm to obtain a loan as an SME, right? I do not have one place where I can get that information to know who will charge me the lowest or who will charge me the highest interest rates. I do not have that information. So I have to typically do it myself, and it becomes tedious for these small businesses. So it provides those good opportunities for the customer. But for the players, this is gold. And this is what people say, data now is gold. That's what everybody is looking for. And so you do not only have the opportunity to, provide products and services to the customers that you have onboarded. Now you have a broad range of access to a customer database that allows you now to innovate, right? To innovate and provide more opportunities, develop more, innovations for your customers. So if you had 1,000 customers based on the platform that you built, based on your onboarding processes, and all of those things come at a cost, now you have access to a broader range of customers and data, which you can use to develop your products and services. And I know that for the traditional banks, open finance may look like it's competition. Yes, it is competition, in that now you'll have to think more of what you can provide so that people come and buy your products and services. but it's also an opportunity because then it pushes you to innovate. This reminds me of what happened during the COVID-19 pandemic for us, particularly in Zambia. You know, it was a huge calamity for us. It was a huge problem for the country as well as for our economy because we largely are an import-based country, right? But it was during that time that we noticed that banks and fintechs started to develop more products that people could use in their homes. So we can say COVID came as a blessing in disguise for us. It was a challenge, but it also provided an opportunity for our members and, you know, the typical financial service providers to be able to innovate. And this is the call that I continue to make to the banks, traditional banks, fintechs. Open finance is not a competition. It's an opportunity for both the customer, the regulator, as well as the players. Thank you so much, Ami.
Thanks for that, Robert. I'm just conscious that we are at time. So I'm just going to quickly, I think there is a question from our audience for Pamela. So I'm just going to quickly open it up. Give me a second. Oh, I think, Pamela, are you seeing the question on your side already?
Yes. Yes, and I was trying to to type. I don't know if I did a good job to type it up.
Do you mind just reading it out, Pamela, and then just responding to it?
I may not be able to read exactly what I can read, but I can even expand more because I think
yes, please do.
It's actually to explain what I just typed.
Okay.
So thank you, Aaron, for asking that question. And I used, I don't know if you can read my answer, but I used more cash as an example because I feel like it's easier, not only for you, but even for the audience to understand. So more cash is a credit product created by NCBA, one of the commercial banks here. And in partnership with MTN, which is one of the telecos in Rwanda. So what it does is that Pamela, a lady from a certain area that I was not before capable to access a formal loan in a commercial bank. Now I can go to my phone because I'm a user of that mobile money app. I can go and request a small loan that I'm capable to pay. And so what it does, Mocash gives me the loan and they give me, they don't tell me exactly when I can pay, but I will pay eventually. So if I don't pay, every time you put your airtime, they deduct the amount to pay the small loan you have requested. Excuse me. So if you, Aaron was asking how does it contribute to the financial inclusion and how does it contribute to open finance? So I think it's obvious that it's contributing to the financial inclusion because Pamela was not able before to have access to the formal loan. Now I can because there was no credit information available for me, which was preventing me to have access to the formal loan in a commercial bank. But now I can, though I don't have information, I don't have credit information, but I can use that loan. And the more I use more cash, more data is available, both to be used by my service provider. It can be bank or any other institution I choose to be. And now my credit information is available, which means now Pamela is known in the financial landscape and we are going to tell her custom product-centric design for me because I have availed my data by using more cash. So I don't know if my answer is exhaustive, and Aaron, you can let me know. I mean, I don't know. Thank you.
Perfect. Thanks so much, Pamela. I think we're running out of time. So, Aaron, I think you can reach out to Pamela if you want a bit more clarification on that. And yeah, I just wanted to say thank you so much, Chilekwa, Robert, and Pamela for your time today. I mean, we could go on for hours. We've certainly, over the last couple of months, have racked up quite a few hours of conversations with you. So thank you very much for your time and your insights. And just to close out, 1 hour is really not enough time to cover all of the things that we've been working on. So we are planning a second webinar later this year. We'll go into a lot more detail into those implementation interventions that Jeremy introduced, right towards the end of the slides. And then we'll also be publishing a synthesis note towards the middle of this year when we conclude our work in Zambia. And we're hoping to sort of, combine our final insights from both countries in that. I'd really like to also thank our partners, the Hewlett Foundation and Smart Africa, and the National Bank of Rwanda and the Bank of Zambia for their ongoing commitment during this project. As Jeremy mentioned, the slide deck and a link to the recording will be made available on our website. I believe the deck is already there, but the recording will be made available a little later today. So thank you so much, everybody, for joining us, and have a lovely day further.